Elon Musk is being sued by Twitter shareholders. According to a lawsuit filed against Musk and Twitter on the 25th of May at the U.S. District Court for the Northern District of California, Twitter shareholders claim that Musk has violated California corporate law to manipulate the market in an attempt to drive down Twitter's stock price, to possibly back out of the Twitter deal or negotiate a different selling price. Wait, what? Yeah, that's right. Musk is being accused of manipulating the stock market, in particular the price of Twitter stocks, so that he could potentially purchase Twitter for a better price. Want to know more about it? Well, we'll tell you everything you need to know in this video. But before we begin, welcome to Elon Musk Times, the place to be for news about tech icon Elon Musk, Tesla, SpaceX, and again, Twitter-related scandals. Don't forget to subscribe to our channel and make sure to hit the bell icon to never miss a video. Now let's dive right in. Elon Musk versus Twitter shareholders. Let's start with the Twitter deal. What was that about again? On the 25th of April, Musk and Twitter came to the agreement that Elon would buy Twitter for roughly $44 billion. At the time, Musk was already the company's single largest shareholder, holding about 9% of shares. Of course, Musk has always been quite an enthusiastic tweeter and is currently one of the top Twitter users with almost 88 million followers. In a statement announcing the deal, Musk explained his interest in purchasing Twitter, saying, "Free speech is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital to the future of humanity are debated. Twitter has tremendous potential." However, despite his initial enthusiasm for the purchase, Musk put the deal on hold a couple weeks later. On the 13th of May, he himself sent out a tweet containing the following message: "Twitter deal temporarily on hold, pending details supporting calculation that spam and fake accounts do indeed represent less than 5% of users." You see, according to Twitter itself, 5% of its accounts are actually fake. Musk has made it clear before that he is not particularly fond of these spam accounts, stating that he would authenticate all real humans in an attempt to rid the platform of all fake accounts after he would become Twitter's big boss. Although critics quickly pointed out that Musk's sudden focus on the amount of fake accounts on the platform might be a strategy to row back on the price he is willing to pay for Twitter, the number of active spam accounts could also be a genuine concern of his. After all, if there are more fake accounts than expected, this could severely hurt his ability to grow ad revenue, as fake accounts are not monetizable daily active users. Thus, the Twitter deal was put on hold. Now, onto the court file, the case of Elon Musk versus Twitter shareholders. As mentioned before, the lawsuit was filed against Musk and Twitter on the 25th of May at the U.S. District Court for the Northern District of California by Twitter shareholders who claim that Musk has violated California corporate law to manipulate the market in an attempt to drive down Twitter's stock price to possibly back out of the Twitter deal or negotiate a different selling price. Let's get into it. The proposed class action lawsuit, a type of lawsuit where one of the parties is a group of people who are represented collectively by a member or members of that group, is led by investor William Herezniak, who, as stated in the court file, has filed the complaint against Musk on behalf of himself and others similarly situated. What this means is that Herezniak is filing the complaint against Musk on behalf of all stockholders of Twitter who, as he suggests, have been financially harmed by the actions of Elon. Then, what exactly were those harmful actions? Well, we looked at the court file again. First of all, the shareholders claim that Musk was well aware of the fact that a percentage of Twitter accounts are fake or controlled by bots, as he has tweeted about this extensively in the past. Secondly, the shareholders claim that Musk made statements, sent tweets, and engaged in conduct designed to create doubt about the Twitter deal and drive Twitter stock down substantially in order to create leverage to either back out of the deal or to renegotiate the price he's willing to pay for Twitter, thereby violating the California Corporations Code and the contractual terms Musk agreed to in the deal. Thirdly, the shareholders claim that Musk failed to timely disclose that he had purchased more than 5% of Twitter to the Securities and Exchange Commission by the 15th of March. The Securities and Exchange Commission, or SEC, is an independent agency of the United States federal government, created in the aftermath of the Wall Street crash of 1929, and its primary purpose is to enforce the law against market manipulation. According to the shareholders, by delaying his disclosure of his stake in Twitter, Musk engaged in market manipulation and bought Twitter stock at an artificially low price, because if he had informed the SEC that he owned 5% of Twitter in March, this would have pushed up share prices. Finally, when Musk finally did disclose his share of Twitter on the 4th of April, shareholders claim it was materially misleading, as Musk at the time did not disclose his intent to join the Twitter board and failed to disclose he was contemplating buying the platform. Sounds pretty serious, doesn't it? Well, let's look at these complaints a little bit more closely. The claim filed against Musk and Twitter on May 25th asks a federal court in San Francisco to uphold the Twitter deal's validity and give stockholders any legal damages, despite the fact that Musk claimed that his bid to buy Twitter will be halted until he receives proof of the number of spam accounts afflicting the platform. This all adds to the uncertainty surrounding his roller coaster pursuit of the platform. The suit stated that Musk's tweet, stating the plan to buy Twitter was temporarily on hold, disregarded the reality that there is nothing in the purchase contract that allows that to happen. Musk negotiated his Twitter buyout in late April without carrying out due diligence expected in such mega deals, said the suit filed by Herezniak on behalf of the Twitter shareholders. The resulting contract needed only to be approved by Twitter shareholders and regulators and was to close by October 24th of this year, the suit said. Musk was well aware that some Twitter accounts were controlled by software bots rather than real people, and had even tweeted about it prior to making his offer to buy the company, the suit argued. Musk then went on to make statements, send tweets, and engage in behavior calculated to cast doubt on the purchase and push Twitter stock down significantly. In accordance with the complaint, the suit claimed that his goal was to gain leverage in order to obtain Twitter at a significantly lower price or to back out of the arrangement without penalty. Twitter shares closed at $37.40 per share on the 14th of June, indicating market skepticism that the takeover will be completed at Musk's first proposal of $54.20 per share. After all, why would Musk want to pay almost $17 per share more than what the shares are worth at this point? According to the court filing, Musk's disrespect for securities rules exemplifies how one can exploit the law and the tax code to amass a fortune at the expense of other Americans. In regulatory filings, Twitter stated that it is dedicated to completing the transaction as soon as possible at the agreed-upon price and parameters. Musk did not respond promptly to a response request sent to Tesla's press contact email. So there it is. Looking at this situation, we certainly can't predict what will happen next, but we know one thing: this is not the first time that Elon has been in trouble. It sounds like this guy loves trouble, but if you ask me, then I must say that this doesn't seem to be too big of a deal for Musk. He has power, he has money, he's got the brain, and hey, an entire legal team at his disposal, so all we can do is just wait and watch. So what do you guys have to say about this? Do you agree with the shareholders? Did Elon do them dirty by his market manipulation tactics? Or are they just sore losers in the financial jungle where Elon Musk is king? Let us know in the comments below, or just leave a fist bump if you like this video. And of course, subscribe to our channel and hit the bell icon so you won't miss the next video. Have the best day, and we'll see you in the next one.